Actually, you guys, hold on 1 minute. Give me 1 minute.
We got a full screen. I got to swipe to see everybody.
It's always a good problem to have.
Yeah. That's a lot of people on the show. Amazing.
I'm trying to make sure I follow everybody on the side here, guys. If you haven't dropped your information on the side, please do so, because I'm getting in contact with everybody on here. Would love to be able to have a line of communication with everyone. So if you could do that, that'd be really great. Perfect.
Okay, you guys, everything is good to go. I was just making sure it was all working well. They've changed a little bit on the back end for Zoom. And so I was just double checking because I didn't want to go live and it not be working. So technically, we probably are going live right now. I'll have to edit this, which is completely fine. It happens. We have tech issues all the time, which I'm sure all of you are aware of. So no big deal. So here we go. Welcome back to another exciting trip around the crypto canaverse. Today, we're excited to interview 3 founders who are pioneers in real estate and AI innovation. First, we have Rich Kopcho, the founder of Covia AI, who is leading the charge in advanced AI infrastructure for decentralized collaboration. Then we have Sam Hayer, the visionary behind Oliver AI, who is transforming the home buying and selling process. Finally, we'll hear from Gabe Barr, co-founder of Deal Estate AI, who leverages his extensive tech experience to make property investment accessible to everyone. Gabe will also share his insights about his app, BB Long, which fosters a sense of belonging, resident engagement, and community building, revolutionizing the multifamily living experience. Stay tuned, but up next, we have our co-host Alan and Jacob Livingood to present our Bible verse.
I'll go ahead and start us off, and I'll read the Bible verse, and we'll pass it around a little bit and let everybody, gather their thoughts around it. We're in Leviticus. This is the Old Testament, 19:18. Do not seek revenge or bear a grudge against anyone among your people, but love your neighbor as yourself. I am the Lord. This is the NIV. All right. So, Alan, would you care to share the takeaways from this verse?
Yeah, I'll reread it again. Leviticus 19:18. Do not seek revenge or bear a grudge against anyone among your people, but love your neighbor as yourself. I am the Lord. This verse teaches us about forgiveness. Let go of your past wrongs. Don't retaliate. Yeah. I'll reread it again. Leviticus 19:18. Do not seek revenge or bear a grudge against anyone among your people, but love your neighbor as yourself. I am the Lord. This verse teaches us about. Do I hear a replay?
Yeah, there was some replay there. Crystal, I don't know where that came from. Bella? I think it came from.
Yeah, please mute yourself if you guys aren't talking and you have background noise. Thank you.
Number 3, treat neighbors with kindness and respect. Number 4, self-love extension. Treat others as you would treat yourself. This command emphasizes compassion, empathy, and harmony. It reinforces it remains a core principle in many faith traditions.
Was this brought to us by Gabe? Were you the one that proposed this verse from Leviticus?
Yeah,
Why was this the verse that you chose? Please do share.
I mean, we see that as really as a beacon of our values and virtues. We wake up in the morning, with our heart open to accept anyone, and obviously see wrong in no one first, and then be able to propagate the love that we feel in ourselves to others as well. So we believe in I personally believe in the concept of receive for the purpose of sharing, as opposed to the other way around. So everything that we get in our life, whether it's blessing from God, whether it's financial stability, whatever, is for the purpose of sharing, because we're just a beacon, we're just a conduit. So this is how we see it. This is how I see it. So it's about spreading the love, and that's my favorite verse.
Spreading love, love it.
Almost sounded like in all encompassing in the golden rule. I love that. Awesome. Thank you.
Do we have any other comments on this Bible verse? No? Okay, let's pass the mic to Kenny. Kenny, can you do today's announcements and upcoming show, please?
I definitely can, Crystal. All right, guys. So appreciate all of the speakers that are on here with us today. The real estate, sector and AI is a interesting intersection for me. On the one hand, I've been doing real estate for since I was 20 years old, and working in it. And then on the other hand, in the last decade, I've dedicated myself to blockchain technology, AI, and AI and blockchain work very closely together. So I think this is going to be an amazing subject today. So appreciate all the speakers that have come on. As far as our shows that are coming up, we'd like everybody to join us for our Give Back show. That's going to be on December the 6th. Where we'll be hosting inspiring founders who are truly making a difference. So we're going to have Julie Dilly. She's the founder of Prayer App. And then Martin Samuels, a movie director and founder of the Begin Film Festival and pastor at the Blake Bush, and leader of One Hope of Colorado, the first tokenized church. So this will be an episode that I want everybody to view in on. It's going to be our Give Back episode, kind of our Christmas themed episode. So please come and support us for that. Your support is crucial. So we'll have, by donating, we're going to have some donations for some giveaways during that time. We'll have some more information of that in the coming weeks. If you're interested in donating for the show, we can get a hold of Crystal or myself, and we can put you in the right direction there. We just want to be impactful and to contribute to meaningful change in our communities, and then also in the spaces that we're working in together. So please be on board for that. And I think that's all from my side. Thank you, Crystal.
Thank you, Kenneth Null. I appreciate you. Up next, we have Rich Kopcho. Rich is a seasoned technology leader with over 25 years of experience, notably served as a product manager of enterprise storage at Hewlett-Packard for 12 years, gaining invaluable expertise in data storage solutions. Following his consulting work with Fortune 100 companies and early adoption of blockchain in 2013, Rich has driven innovation across 20 plus startups. As founder of Paisley AI, an AI micropayments company, CMO of Convex, Lattice Tech, and founder of Covia AI, decentralized vector DB protocol. He focuses on developing ultra low latency AI infrastructure for secure, scalable data management and AI workflows in the Web3 system. Welcome, Rich.
Well, thank you, Crystal. That was quite a mouthful. I'd like to honor my co-founder, Mike Anderson. And Mike is actually the brains behind Covia. His background is quite amazing, actually. He was a coder since 8, and he won the UK Olympiad as a teen and represented the UK. Went on to McKinsey and did about 12 years of consulting in all of the big infrastructure places like banks and healthcare and so forth. So it's got quite a broad swath of understanding of what the enterprise needs. And then he went on to work on Ocean Protocol as a founding CTO. And Ocean Protocol, you may know, is a data play. When he was there, he realized that blockchain just wasn't fit for purpose yet. So he stepped back and did a research project. And that's when I met him about 2 years ago. He was about 3 years into it and building something amazing. It was not quite blockchain. It was lattice technology, and it has some really interesting properties. And one of the things that it has available to us is the ability to build Covia on top of this convex infrastructure that he was experimenting with and designing. And so Covia is like the HTTP for AI. It's an open standard protocol that lets organizations connect and orchestrate all the parts of their AI systems, data, compute, models, and services seamlessly and securely. So you can think of it as the backbone for scalable enterprise-grade AI, making AI as easy to integrate and deploy as as pluggable as a USB drive. Right now, enterprises struggle with rigid, siloed AI solutions, and Covia solves this by enabling flexible, decentralized AI workflows that unlock efficiency and innovation across many, many industries. So, Mike, would you like to add a little to that description?
Yeah, sure, Rich. And I worked in AI many times over the course of my career, and you always had this problem that it was very centralized. At the beginning of an AI project, you always had this like big piece of work where you had to grab all of these data sets, you had to negotiate agreements to share data, and you'd be pulling all of this data together in order to build and train your models. And this was often the most painful and most time-consuming part of doing an AI project, was just assembling all this data. And then you could work on it in your own little team. But it's a very impractical way of doing things. Data is global and data is held by many different organizations. And also the talent is global. You've got different people with different skills building the different parts of these AI systems. So it sort of gets to the point where, the only people able to play in AI are these people who've got these massive teams and massive data sets already, the Googles, the Facebooks of the world. And, we really wanted to change that. We really wanted to make it possible to build AI solutions that spanned across all of these different silos, that were truly interoperable. And, the inspiration came for the internet, as Rich said. It's the HTTP for AI. How do you create an open protocol that anyone can plug into? Anyone can build a solution that can talk this protocol, and then you're suddenly unlocked the potential by not being constrained to these little organizational silos for building AI systems. And the cryptographic technology is then the other angle. One of the big problems in AI is trust. Do you trust the data that you received? Have you got the integrity? Have you got the provenance? Can you trace back where it originally came from, etc.? And the great thing about cryptographic technology is it lets us embed that in the protocol. So that in fact, whenever you do any of these transactions, you're actually creating a cryptographic trail that is unhackable to some extent. And that means you can verify the AI that's being done. What data was used to train what model? Yeah, what outputs were produced in response to what inputs? And that's what the protocol is all about. It enables this decentralized flow of data for AI, but also makes it trustworthy and also makes it verifiable. And we think this is a really important capability. If people are going to build the future of the enterprise on AI, as many people are talking about, there's currently no good infrastructure for them to do that in a way that spans across organizational silos. So in the work we've been doing on lattice technology, we realized that the same lattice technology that I originally developed for convex actually works perfectly to solve these kind of trusted data problems. And that was basically the inspiration that led us to create Covia.
If data is the new oil, then you can think of Cobia as the pipeline, making it flow securely across AI economies.
Perfect.
So we're not just riding the AI wave, we're building the rails it runs on.
So let's talk a little bit. Let's get a little bit like real world use case, Rich, because a lot of times, obviously, a blockchain itself is a difficult subject for some people, and I mean AI even more so, right? The complexities of the development of AI and the use case of AI is kind of foreign to the majority of the public, right? However, we believe that over time, AI is going to be integrated in everything that we do. So, can you talk to me a little bit about the use case specifically? So, give me some examples of maybe, a business use case or even eventually individual use cases for, your project and how that's going to be integrated into, business.
Yeah. I think Mike has a pretty good handle on that from a couple of different areas, finance for one and healthcare for another. Do you want to speak to that, Mike?
Yeah, no, very happy. But I mean, to your point, Kenneth, I mean, AI will get integrated into everything at some point. Yeah, it's a matter of when and how. And obviously, the use cases which have caught people's imagination early on are things like chatbots. Yeah, AI giving responses to human input. But really, any input and any output where that output is produced by an AI model is a potential use case, and that's pretty much everything in computing. Yeah, if you think about someone looking at bank accounts and coming up with recommendations for better budgeting, yeah, or if you're thinking about healthcare, looking at someone's entire health history and saying, well, okay, what are the kinds of health interventions that would make sense for that patient? That's again an AI problem, and the reason that we think that this decentralized infrastructure is so critical for that is the data is almost always in different places. I don't know how many health providers you folks have interacted with, but especially if you've got many kids or you travel frequently in different countries, you've probably got little pockets of data across 20, 30 different healthcare providers. Yeah, and the other organizations that they work with and have data sharing agreements or not. So it's not simply the case that data in general is in one place. And if you want to build really intelligent agents and workflows, you have to make that data usable in the context of an AI system, a broader AI system, and healthcare is a great example. Yeah, I mentioned each individual probably has their data spread across multiple healthcare providers. Yeah, I don't know about in the US, but in the UK, it's a complete mess. It's all over the place. And in order to actually train AI models, yeah, you might have to aggregate some pieces of that data. Some data, however, may be very sensitive, and you don't want to move it. It's got to stay in one place. And there's various different techniques in building AI models that can send the model to learn from the data and then bring the model back after it's learned, federated learning and stuff like that. But the infrastructure to make all that work is the challenge. So healthcare is a great example. You've got maybe 20 different healthcare providers. There is maybe 500 different healthcare providers who want to collaborate in building AI solutions that will work for all of their patients. But each individual might interact with many of them and maybe some organizations outside. First of all, you need to train the models. Well, that's going to require aggregating data that's representative of all of your patient population across 500 different healthcare providers, maybe anonymizing it so that no sensitive data is shared. But then using that to build models and predictive and statistical models with AI help. And then you want to recommend a model. So you want a model that is actually going to take those summaries and predictions and turn it into maybe treatment plans or treatment recommendations. And that becomes an AI assistant, if you like, to clinicians. And at the same time, when an individual patient actually turns up, well, actually, you're going to want to draw that data to give an up-to-date prediction, maybe from 20 different providers, and put that through the model, come up with some predictions, and then put that through the automated AI assistant and to give some feedback and some information that the clinician can act upon. And it's not necessarily all happening within one company. Yeah, this has got to happen in multiple different companies, and maybe the company that provides the clinician assistant agent is a different company from the one that actually builds the predictive models. And in fact, in order to make this work for a single patient interaction, you've maybe got 40 or 50 different interactions happening with multiple systems that need to be orchestrated across multiple different organizations with different IT infrastructure. Now, building a system of that complexity across hundreds of organizations is simply impossible. Yeah, no one would even try it. What you need is a standard protocol that enables people to plug together the different systems in that ecosystem and to enable that entire data flow to work. And that can be automated, providing you have the right protocol and providing you can make sure that the process that you want to execute can be expressed in a way that is suitable for automation. Now, these are all complex problems. Some of them are solved. Some of them we think we've got some very unique technology to help solve. But it's certainly feasible, and I think solve one of the most important problems in systems such as healthcare, where you've just got this complexity. You've got multiple different parties that need to collaborate, and you ultimately need to bring that together to give a really good service to the customer, the patient in this case.
And you can expand that to real estate and all of the different like geographical areas where you'd want to build something. What are the rents in those particular places and so forth. So you can see that the data is not all in the same place.
Thank you guys. I appreciate that so much. I think that makes it a lot more clear for those listeners out there that aren't as familiar with the use case and potential of AI. I'm going to let Jacob. I think you had your hand up. If you had a question, go ahead, Jacob. We'll throw it over to you.
I want to. That was absolutely beautiful, Mike. Thanks for sharing. I want to make this more tangible for the average viewer, right? So, as a founder, when you're starting to build your company, you're wearing a lot of different hats, metaphorically speaking, right? We talked about healthcare, and we gave that example, and we tied it back to real estate, right? But what you guys are building, and correct me if I'm wrong, but simplified down, you guys are using artificial intelligence technology to automate standard operating procedures so that the founder can then take task load off of their deck and their back, so that it's the systems are running outside of their direct purview, utilizing technology. Correct me if I'm wrong.
Yeah, I think that's very fair. I mean, the average small business operator or startup operator does not want to be operating big complex systems. Yeah, you want to be leveraging things that other people have built. And, particularly if you don't have a team of PhD researchers on your staff, you're not going to be building the models yourself. Yeah, you're going to be, you want someone else to do that, but you might want them to do it with your data. So you need a way to get to data to them, get them to build a model for you, and then maybe give you the model back. And then you're going to need to actually apply that model. And maybe when you're applying that model, you want to share that with your partners. So you might want to build an API so that your customers, your partners can actually make use of that model by sending in questions to the model. Yeah. So all of these are interactions across organizational boundaries. And yes, it's standard operating procedures. For every current standard operating procedure that's done by a human, you can imagine an automated workflow, which either happens automatically when it's triggered, or maybe it happens when an AI agent decides that it's the right time to do it. And, you obviously need to think very carefully from a business perspective about when do you give the AI the capability and the decision right to trigger off a process. But that's where it's going to go. It's going to go to the situation like, healthcare, proactive healthcare. Yeah. You might know patients through all of this data that multiple providers have. And through analysis, you might get a suggestion. Well, in fact, this person seems at a really high risk of developing diabetes. Yeah. And they probably should be thinking about their diet already. Yeah. And that might be something proactively you want to do, to say, okay, to send a message there to their clinician and say, here's 10 very high risk patients. Yeah. Here's why they're high risk. up to you, Mr. Clinician. You may want to take action and, contact some of these and, help them to tailor their, their diet to ward off some health problems. That's the kind of application that really adds value, because, a human's not going to be able to do that at that scale and that accuracy, and doing it well is hard. But once you've got the AI models that can do that automatically and then still give the ultimate decision to a human, so the process involves AI agents, but it also involves humans taking critical decisions that require human judgment. I think that's where the future is going to go for these kind of, standard, as you say, standard operating procedures. That's exactly what it is, but it's done at scale and automated in a way that we haven't really seen before.
Amazing. And also one more like follow up to that, right? A lot of business owners and founders are paying for a bunch of different SaaS products all over the place to do minute task load, and what you're building is sort of all encompassing. It's a one and done situation for all these.
Yeah, I mean, we'll start with AI, but yeah, I mean, the same technology could be used for other kinds of tasks, potentially as well. And yeah, the integration, the standard protocol, so that this can all work together. That's really what's critical here. How do you build that in a way that's effective? And that's where the decentralized technology comes in, is actually building protocols that work at scale with many different participants that you can still trust.
Right, and lets the organizations connect and orchestrate all the parts of their AI systems. Like I said in the beginning, the data, the compute, the models, the services, all seamlessly. So it's a protocol that allows you to do that. It doesn't dictate what you use, but it's basically the pipeline.
Thank you. Beautiful. Mike and Rich, I appreciate that so much. Let's really quickly, we got about 3 minutes here before we're going to go to our next speaker. So a couple things I wanted to ask you guys is, so at the current stage of Convex, what kind of, are you guys looking for investors, advisors, partnerships? What kind of help or are you guys in the market for looking out for to continue to develop at Convex?
Well, that's interesting. Go ahead, Mike.
Yeah, so I would like to distinguish two things. Yeah, just to clarify that question. There's Convex, which is the underlying lattice technology, which is largely built, and we're launching that, and that's a project in its own right, which provides a sort of decentralized, network, kind of like a crypto network. It's not technically a blockchain, but it does many of the similar kind of things. And that's a very interesting project in its own right. It's non-profit, so we're doing it for the good of humanity, and you can buy coins in that, but we're not taking VC funding or anything like that for that. Covia is a startup which is really taking that technology, which is already built, and applying it in the space of AI orchestration, as we've been explaining. And that is a startup that we're currently raising funding for, and is more of a traditional startup, but using some very untraditional technology. So I'll let Rich say a little bit more about that.
Yeah. So if you think of Covia, it isn't just another bet on AI. It's the foundation every other bet depends on. Because people are trying to build all these models and build all these AI businesses, and if each one of them has to go through the pains of building a Google or a Facebook or a ChatGPT, we'll never get there. So we need this infrastructure that all other AIs depend on. And the best part is, nobody's really solving this problem right now as effectively as we are. And if you're investing in AI and you're not looking at what we're doing with Covia, you're not really looking at the future, right? All of this stuff has to come together. So we're welcoming all kinds of investments in Covia. We've soft circled some, and we're looking for our lead right now.
Okay, so in the case that we have, either those on the panel that can connect you with, or those people listening, either now live or later on at the recorded show, where is the best place that they can go with questions or with investment proposals or whatnot? Where can the audience reach out to you?
They can reach out to either myself at so Rich at Covia AI would be a good place to start. And you can find us on the web at covia.ai. And I think our email there is hello@covia.ai.
Perfect. Real easy to remember. I love those. I love those simple ones. So Rich, really quick before we go, if you can, in just 30 seconds, we know that you're also involved with Bid Angels and the Bid Angels group, and that you have an upcoming event. Could you tell us about that really quickly before we move on to our next speaker?
Yeah, sure. There's two of them coming up in the next month. The big one is in Puerto Rico, so it's the Tokenize conference, and that's the original coin agenda that Michael Turpin set up with Dave Johnston for Bid Angels, and that has been rebranded this year as Tokenize, with the advent of tokenization happening around the world. So the tokenizeconference.com, you can get tickets for Puerto Rico. I believe it's the 9th through the 12th, right after Bitcoin San Juan.
Perfect.
Yeah.
All right.
Thanks for having us.
Yeah, appreciate it. Appreciate it so much, Rick. Mike, thanks also for being on. We're gonna go.
We have Sam Heyer up next. Sam is an entrepreneur and former software engineer with a profound focus on blockchain and AI. After successfully exiting his first blockchain venture in 2017, he became a trusted advisor to numerous emerging startups in the field. Now, with Oliver AI, he's reshaping the real estate market by leveraging AI and DePIN to revolutionize home buying and selling. Beyond tech, Sam channels his creative passion into filmmaking, investing in, and producing movies that bring compelling stories to life. Welcome, Sam.
Hey, Crystal, Sam, before you move forward, can you check your recording? Because I don't see it recording.
It is. I'm recording. Okay. It's live.
Okay.
I have an actual panel where I can see everywhere that I'm streaming and any comments that we get. So, but thank you so much. We actually, that was somebody else's AI that was recording that actually stopped recording because it said we weren't talking or something like that. So anyways, but thank you, Alan. I appreciate that. Welcome, Sam. Please take yourself off of mute.
Thank you very much.
So Sam, tell us about Oliver AI and why you created it.
Yeah, I mean, I think it's anybody that's been interested in AI for quite a while. I mean, you're constantly thinking through different ways that it can, be implemented, different ways you can apply it. There's a lot of different kind of versions of the future of kind of what that entails. In my background, I did a lot with data over the last 10, 12 years. And so really started out with a lot of like just real estate and housing data. And I was more than anything just curious what could be done there. I really didn't set out with a very clear vision of what I wanted it to be. I didn't have some kind of brilliant vision for the future with it. I really just wanted to play around with language models and data and really see if we could start, kind of finding some emerging patterns and, things that I thought were kind of exponentially valuable rather than kind of linear. I think AI doesn't make any sense if something is linear in its value. Just the sheer cost of it is doesn't really line up. So that was really the the catalyst, and we spent the last year building out and testing different models with it. We've got one of the largest like real estate data sets now, and so we've been kind of testing out in a few different capacities with investors, real estate agents obviously being a big one, brokers being another one, and kind of slowly turning that corner of rolling out a kind of self-serve platform for realtors is kind of our next big release on that side.
That's really, really awesome, Sam. Like I said, I'm very interested in the joining of AI with real estate. And so when I've actually talked to this about, one of my companies is working with several tokenization platforms for real estate. We're looking at AI for real estate. I think I think real estate's kind of a low hanging fruit for some of this new technology that's coming on. But can you talk to me a little bit about the problems, the current problems with real estate that Oliver AI kind of attacks, and how and what the value proposition is there?
Yeah, yeah. So there's two sides really, I would say, to kind of what was built out with Oliver. One is specifically being on the data side. Um, any real estate investor is looking for their edge when it comes to data. To make a better decision, to find the right property, whatever the case is. A lot of people rely on local realtors for that. And you just kind of don't know what they know. You don't know what they don't know. And they're kind of creates that gap. And so the AI side of that is really focused heavily on the data. The kind of initial piece that we're really rolling out with is more on automation of tasks for realtors. And it is ultimately backed by AI, but it's not really fully implementing our models with this yet. But there's right now there's this kind of gap in people have been talking about a lot more with like AI agents. AI can do some really cool stuff and it can come up with a lot of information, but when it comes to execution, there's still a massive gap in kind of what can be done there. So the kind of product side that we're going to be rolling out with, is really this like kind of self-serve platform for realtors, which is about execution on a lot of kind of day-to-day tasks for realtors. And then from there, we'll continue rolling out our models kind of over time, just continue to kind of strengthen not only what Oliver can do, but moving more in a consumer direction with that as well.
Thank you, Sam. I appreciate that. So, talk to us a little bit. I mean, you've obviously said that this project is spanning, over a year plus now, where you've been working on it and kind of building out. Talk to us about where you're currently at with development, and then talk to us about what the project, or what stage the project is in, as far as are you at the stage where you're looking for potential fundraising partners or venture capital? Are you looking for any internal, bodies or man hours, advisory, anything like that, and just kind of put that out there to some of our, some of the audience we have here?
Yeah. So where we're at on development so far, with our current platform really is in like I'm going to call it a private beta. It's probably closer to an alpha in terms of its like execution. So our models are pretty robust. Our models are very developed. Our data is one of like the biggest aspects of what we have. But when it comes to the self-serve platform, that's like the next piece that is being rolled out. So we're probably, I would say, 90 days out from being able to do more of a public launch around kind of our self-serve platform, where realtors can be utilizing the platform, solving a lot of their problems, and implementing our software ultimately. In terms of kind of on a company level, so I've self-financed everything to this point. And the big piece that we're looking for, so we've had a lot of interesting conversations of like, how does blockchain and AI like really come together? There's a lot of theories around it. Some of them are good. Some of them I think lack, and I don't know. I think they lack economics sometimes. But a big piece of what we're looking to roll out with this is really focusing on DePIN. So implementing a decentralized physical infrastructure. And we will be I might be speaking a little too soon on this. I think the plan that I would love to do is ultimately roll out a token around that. And I say that a little kind of wishy-washy. I love blockchain. I've been in it for a long time. I think anybody that's on this call has kind of a similar feeling for it. But I also despise forcing something that shouldn't be. So I think there's a brilliant capital efficiency with decentralized physical infrastructure networks. And I think when you start looking at that with AI and compute and data storage, I think it really is a brilliant marriage there. So any partners, influencers, people that are interested on that side, I think is really kind of the next big piece for us. What we're doing, my stance on this is prove the model, prove like the retail side of this first. And there's a lot of projects on DePIN that launched with that in mind and then couldn't get consumer traction. And I really want to flip that piece around. I want to kind of create the supply side first. or usually create the demand side first and then, then roll it from there. So yeah, I mean, anything on that side, I think those are probably the two biggest ones that I'm really looking to tee up on that side. And from there, I mean, I think it's an idea that, depending on how DeepIn goes, can change whether it needs VC financing or not. And I think that's something that is really interesting for me, is kind of like an exploration around like the business itself. So never opposed to VC, never opposed to VC conversations for sure. But I think there's, that's kind of the tentative roadmap right now.
Perfect. Yeah, we've actually gotten quite a few questions from like listeners right now. So a few that I'll just throw over. You've answered a couple of these as you've been talking, but I've just been looking at them coming in. So we have a message that says, when can I sign up? Will this be for brokers or agents? So let's let you talk a little bit about that. Obviously, can you talk a little bit about the like the broker or agent business type use case versus the your retail really quickly?
Yeah. So the short answer is both. We do have and that's kind of a multi-tenancy side of it. So brokers basically will have kind of seat licenses along with that. We're currently working with a couple big brokerage companies to really try to flush out exactly what that looks like. I don't have a perfect model for that yet. Initially, my thought process was just building it, for real, like for real estate agents directly, which is like a very obvious kind of use case on that side. And then the more we started talking with brokers, there became a pretty obvious, advantage there as well. So we're still working out exactly what that looks like, purely just kind of on a pricing and functionality standpoint. But we are building the platform for both.
Perfect. And then another one that we had here was one of our listeners was asking another question here is is there any opportunity for equity investment? This was from an investor that's listening right now. Are you looking at any opportunity for an equity investment, or obviously you've stated that maybe a token revolving around the DeepIn play may be something in the future, so there may be some token investment opportunity, but is there any room for potential equity investment in the project at this point?
Yeah, I mean, I hadn't really considered it. I guess I haven't pursued it. It's certainly been, a thought there, but I haven't pursued it. I think on the equity side, I would definitely be interested in talking if people are strategic investors for sure. I think that there's a lot that can be, I think there's a lot of value that can be gained for kind of what some of the next steps are here as well. So I'm absolutely open to those conversations. And I think, something that, especially if we, with looking to pursue kind of a DeepIn token on that, there's, I think there's potentially value kind of on both sides there, with equity getting kind of advantage to the flip side of that as well. So I'm open to those conversations for sure, and absolutely looking for, for strategic partners as well.
Perfect. Okay, so we've got to wrap up here really quickly and move on to our last speaker. Before we do that, Sam, for those asking questions and that are interested in the platform, can you give us, if people wanted to contact you about strategic partnerships, investment, get more information on the project, where can they contact you? How's the best way to get a hold of you?
Yeah, so shoot me an email is probably the easiest one. So sam@getoliver.ai. Shoot me an email there. And also, if you want to go there, sign up, join the wait list as well. I can follow up on that side as well.
Perfect. Thank you so much, Sam. Super interesting. Crystal, I'll throw it back to you. We can go ahead and continue on to our next speaker.
Thanks,
Thank you,
guys.
Kenneth. Thank you, Sam. We appreciate you. Up next is Gabe Barr. Gabe is the co-founder and CTO at Deal Estate AI and bblong.com. He helps real estate entrepreneurs build, scale, and grow cash flow-driven multifamily properties through syndications, AI technology, and real estate tokenization. Gabe brings over 25 years of experience in technology and syndication space and a proven track record of designing and building AI applications, as well as raising over 170 million in venture funding. Welcome, Gabe.
All right. Thank you. Thank you, Crystal, for having me. Thank you, everyone, for joining. Appreciate the opportunity to be here and kind of talk a little bit about our venture and what do we do here in Real Estate and We Belong. I guess I'll start from where we see what we see in the real estate space, and particularly in the multifamily space. So when we actually went out and looked at the space, we realized that the majority of our core competencies and our ability and the ability to integrate AI from a data perspective lies in the multifamily. So we end up going out and buying multifamily space, multifamily real estate, with the intention of integrating technology that will foster community, build the ability to kind of go in and really create something along the line where people will love to stay in and rent. And this is, I'm going to share some statistics with you. When we actually dove in, we realized there's two major problems in the multifamily space. One of them, I'm sure you guys are familiar with that 96%, this is a research that was done by LendingTree, 96% of renters say that they want to own a piece of real estate. 50% of them don't even think that they can actually get there. Interest rate prices are surging, and so the ability to actually exercise to go in and get a piece of real estate becomes it's like a dream, unachievable dream. Another way, and this is a major factor that we kind of once we got into it really deep, is the way multifamily is valued based on the NOI, the net operating income. And the net operating income is a major factor that is right now is driven by two main components. One is obviously the rent, right, and what the tenants are paying. The other side is other non-rentable income, such as parking spots, trash removal, or stuff like that the landlord or the property management is bringing on to the tenant. So there's about 7% of ratio as far as non-rentable income. And what happens is that these are the major factors. It's the only thing. So when one will go in and buy a multifamily value add, and in order to increase the value of the property, just to give you give you some numbers here. If we're able to increase, let's say, in $100,000 a year, the NOI on a 5 cap, on a 5 market cap, we're able to generate about $2 million in valuation in increased value of the property. So if we bought the property at 10 mil, we're now at the $12 million valuation, a property value, just by increasing 100%, $100,000 in the NOI. So one of the things that we realize is also, this is an epidemic, almost an epidemic. 50%, on the average, 50% of the tenants will leave the place of residence once a year, meaning that every year the landlord, the property manager, have to go out there and acquire. Are you guys?
I'm sorry, can someone, whoever's talking in the background, please mute themselves?
James, yeah, there we go. Okay.
All right. So basically, what happens is that the landlord, the property management, constantly have to be out there seeking new tenants, bringing new tenants on board. And we've kind of weighted the average is about $1,500. The cost about $1,500 to acquire a new tenant, to bring it in, whether the property is full or not, with 100% occupancy or 60% occupancy, there's still the cost of acquisition of new tenants acquisition. And when we dove in really even further, we realized one of the reasons is the lack of connectivity between the tenants. So I was just speaking to a friend not long ago, and I asked her, did you rent? And of course she did. She lived in an apartment building. And how long did she live there? For 5 years. Oh, yeah, that's really, kind of struck me as weird. So I started inquiring, why is that? And the reason that is that they had a neighbor with kids almost at the same age as their kids, and they were playing. And one of that really kind of threw us off, because eventually everybody wants to connect. Hence the belonging brand that we have really wants to connect. So we end up going out there and built a software that all it does is building communities, enable the tenants to build their own communities. Now, we integrated like an source, some sort of an Amazon and Uber-like, and everything within the app, so they can actually have the tenants can use their own marketplace. They can rent and buy stuff between themselves. They can create club, foster club, play dates, all of that within the app itself, within the software. And then on top of that, we build another software for the property management, and we integrated an AI piece. So if we're going back to the NOI side, the NOI piece is really an instrumental, because every landlord and every property owner will say, you know, they want to increase the value beside the organic 3%, 3.7% a year growth, and especially in multifamily. So we have added 2 layers of income coming into the property. One of them is being advertisers, classified ads, promotions coming from outside vendors, either nationwide or local, to the property itself. So now just the tenants are able to see classified ads specifically for them with local vendors. The other part is, of course, this is where we're going to get into the tokenization side, the real estate tokenization. Going back to the 96% of all tenants want to own a piece of the real estate. We have added that piece of blockchain. Now we're able to offer our tenants some sort of a tokenization base where they can actually get into fractional ownership with the landlord. So once we are ready to come in and integrate tokenization fully with our tenants, the tenants are now able to take a piece of the property, whether it's a whole or fractional basis. So the usage and the application is what we're focusing on. The tech is obviously, it's a proprietary tech, but we're using the standard tech and blockchain, and we're using Ethereum for the blockchain network. But the baseline is that we want to have the ability to help our customers. We become a customer-centric rather than, this is really something that also struck us as very weird, because tenants in the multifamily is the undervalued customer that in any space that I've seen. And because there's a shortage of living, housing, and when you have a multifamily, people want to stay in, obviously want to leave, so they have no place to leave. So, but the truth of the matter is that does not coincide with the 50% turnover. So you have 50% retention, 50%, and still there's no really customer-centric type of model. And that's what we went out to change. We really are here to change the real estate and how multifamily is being perceived more from a customer perspective. And we know, and we've seen it there was a case study done in another company that does something similar to what we do, but on the affluent side, on the A property, that this is actually is going to increase the level of retention and level of satisfaction. And of course, once there is an ownership participation, that will increase the retention as well. So this is where we at. We're rolling out our software beginning January, and we have already acquired between our partners and our board, we've acquired over 10,000 units, $2 billion of assets. So we have a lot of experience in the property management and actually understanding how to buy real estate and how to bring about and to create the value within the property itself. But now adding these 2 layers from an investment perspective, it becomes very interesting, because if investors were used to getting, let's say, 2x on their money in 5 years, which is usually what the real estate is all about, now with the tech components, with our models, we're able to see 3x, 4x, and even more. But again, this is something that obviously we'll see down the line as far as the revenue stream coming in. So yeah, this is really in a nutshell. I know it's kind of long, but still in a nutshell. Jacob, you had a question here.
Yeah. So my context, right? I do social media. I've like big communities. So if I'm understanding correctly, and correct me if I'm wrong, your software has sort of two different sides to it, right? You've got the
Right.
community-centric model that is for like tenants, right? In
That's
multi-family
correct.
property, you use the parable of like kids playing together, right? So that's connecting in creating community between the tenants themselves, as well as the more business-centric side where your service providers or your property managers and your investors are all having links to connect in through your app and interface.
Well, there's actually three components. There's the tenant end of it is we actually build it bottom up, meaning that the tenants can use it and download the software and use it irrespective of the property management, if the property manager chooses to integrate or not. So the tenants are able to use and build their own community, like I said, on a separate silo, so to speak. And then the property management, we've added another piece of software that we built also, that once the property manager choose to integrate and build and bring our software, it will immediately integrate with the tenant side. The third component is the tokenization. We've built a profile, we've built a software to tokenization that will integrate, because a token, we don't want to limit the token side only to the tenants. That will obviously right now in their app, they can go in and choose to participate in the token with the digital wallet. But we're also are ready to bring it to outside investors. So outside investors can now participate in this investment opportunity and it will be either tokenized specific on a specific property, or it will be on a more of a generic type of token rated for the entire portfolio. So it's really it's where we decide to go about it. So there's three components to that.
Awesome. And then like another follow-up question to that, right? Does the app have built-in sort of an integration to have tenants sort of move towards the business-minded side and get involved in the tokenomics of it and step more towards the business-minded aspects of real estate? And
Absolutely.
Also as another follow-up to the follow-up, right? For retail investors that want to get involved into this, what does that look like as you roll out the token?
Right. So absolutely, like I said, the app already has an existing opportunity for the tenants to get involved in the token side. So they get involved in the business side, and they will be directed into the token platform and acquire, like I said, fractional investment, which is very attractive to tenants since they want to own a piece of that. They live in a piece of real estate in their own apartment building. So now they have a vested interest that the place is going to look great. They're actually going to participate in improving the livelihood of the property itself. And for retail investors, like I said, they will be able to access directly the token side. And that's why we created 3 layers of software base. So they all integrate, but they all can be standalone. So even for the landlords as an issuer, it needs to offer that register the property on the blockchain, so we can go in and go about and offer that, whether it's going to be an initial ITO, initial token offering, or whatever it's going to be a secondary market. We want to go on a secondary because when we go out and buy, we usually buy with an LP and debt, right? 70% LTV plus 30% or even more. So the equity piece is on a secondary. So you got to take the primary investors, the primary LPs, and now you liquidate an asset. So from an illiquid asset, we're going into a liquidity basis. And offering that on a token basis. Now, this is really, we've tested it and we are seeing that in the US, but the market is, I mean, I'm getting requests from Europe. There's 30%, there's 110 million renters in the US alone. In Europe, there's 220 million renters. So the applications and the ability to really scale is really, in a large magnitude option here. I hope it answered the question.
Yeah, thank you. And I think Dan has a question here. Dan, you can go ahead and jump out and give your question.
Yeah, thanks so much. Really interesting project. I came from prop tech before I started my most recent startup. Curious if y'all are thinking about facilitating rent payments for tenants to landlords. Just because that is obviously a thing crypto can unlock, but 2, the power of the rent payment in reporting to credit reports and helping folks build credit so that eventually they can be in a position where they can apply for a mortgage or build a home, or just become home owners themselves. Just curious about your thoughts on any of that.
Well, I mean, it's an interesting, definitely an interesting concept. I mean, obviously, at the moment, yes, payments and rent payments is already integrated in the software. Tenants can pay via Zelle or Venmo or any other digital currency, digital mode that they are, even cash transfer or check. Yes, it's already integrating. As far as reporting to credit bureau, it's an interesting concept. I think it can easily be integrated. I know there's one specific company in the state that does that. That provides a service, so we can just see. I don't think we'll go about and build it from scratch, but we can definitely, using API, we're definitely able to integrate that that side of the business. So. I agree. Again, from a customer-centric perspective, if we see the benefit for the tenants, definitely is definitely a good idea that we can definitely explore.
Jake.
Amazing. I have two questions. So first of which, say fictitiously, I'm a lifelong renter and my landlord finds themselves involved in the realestate.ai protocol, right? And so if I'm understanding this correctly, effectively with your fractional reserve ownership that's sort of leading and edging the person that's a renter into getting into the business side, it's sort of a blockchain enabled rent to own situation, is it not?
Well, it is. Again, we don't like to label that, but if you want to see that as a whole, our vision is that when we're looking to buy 100,000 units, 100,000 doors, we have like about 12,000 right now. We're in essence building the floor, the stock exchange, so to speak. Okay, so yes, it could be. You're absolutely right. That's type of rent to own. But rent to own is where a percentage of your rent is allocated towards ownership. And that's something that has been done, has been trying. I know some ventures have tried to do it, not very successfully. This concept is on top of you paying rent, is the ability to now sit on the LP side, right? So I want to, right now, if I'm a non-accredited investor, I cannot participate in a 506C type of model capital raise for, unless it's 506B, friends and family, to buy. So there is a regulation issue. And obviously, right now, the regulation is also one of the I guess the headwind as far as the overall tokenization, because the market is expected to grow to about 16 billion. Real estate tokenization going to about $16 trillion market. Right now, it's about $2-3 billion market valuation. So there is a major growth trajectory up ahead. And we think the administration now is definitely going to help expedite that and put it on a fast track. But that's, that remains to be seen. But our idea here is to really enable the tenants to take a portion and take a fractional ownership of the building that they actually pay rent for. And that's really puts them in a driver's seat. It's going to just giving them a seat at the table, so to speak, for them to take on and really become part owner or even whole ownership. Because when I buy a piece of real estate, a multifamily, there's usually within the pro forma, within the 5-year plan, I expect to sell it at a lower cap than I bought it, because I'm able to increase the NOI and the market will have a certain cap. But nobody's is really focusing on the exit side, and we're just adding another layer. And yeah, we're going to sell the property in 5 years, but we're just adding now another layer. One, will add more to your NOI, to our NOI. The second part is now we're able to bring the tenants as a participant in the exit. So we've created another market, so to speak, if you want to address it this way.
That's awesome. Thank you for giving that clarity. Another thing that's sort of a side tangent to that, right? Deal Estate AI is looking to allow the landlords to run ads to generate more revenue. What does that integration look like?
Well, think about this. I'm sure you guys are familiar with the Nextdoor, the app. It's a very similar concept, or even advertising on LinkedIn or advertising on social media. It's a very the AI is actually generating as far as the advertising side. Our AI enables us to kind of understand the customer, the tenant, as far as once they're really participate in that in the flow of the app, whether it's clubs or we have added social engagement, social impact, and other play dates, whatever. We are able to tag them, and our AI builds in the platform. So when advertisers come in, we're really now, let's say we have 100 tenants, we're really are in a position where our data enables the tenants to really specify a specific piece of advertisement to a specific tenant. Okay, because it might not fall within everybody's. But so it's a very small community, so to speak, but with a very big potential, each one of them. So, and also when you go into national advertisers, let's say lending, right? So let's say finance. Finance becomes like a more of a generic type of advertisement for everyone, as opposed to local vendors. I mean, pizza delivery or whatever. So that is a shared model with the landlord. So we're taking portion of the earning and we're giving it back to the landlord. So now the landlord has another source of income. Same thing with tokenization. When tokenization comes in, we're taking we're planning to integrate a transactional fee, 1.75 transactional fee, and that some of that transactional fee will obviously be diverted into the landlord. So now NOI will increase as a result of that.
Okay, amazing. I believe Sam had a question.
Yes.
Yeah, and maybe I missed this part early on, but what kind of properties are you focusing on with the multifamily? Is it more like kind of 4 or 8 unit, or is it like up to apartment buildings, or I guess kind of what's the focus there?
Right. The focus is on the larger apartment buildings, even though we can definitely, because
Okay.
there's a property management aspect to it, but multifamily by the virtue is 5 units and up. That's considered multifamily. We are looking at the 100, 150 and higher than that. That's where we see our most higher value. But that's not to say, I mean, we were just approached by a condo owner that they have they own that they own part of the community. So I asked them, what is that? How do you guys communicate between each other? You have 110 homes that you all own. How do you communicate? Obviously, this is a community base, right? Or gated community. We have a Facebook group, right? So the applications here are, it doesn't necessarily have to be only on the renter side. It can also be in the ownership, because everybody wants to belong, right? If I can sell babysitting services to my next door neighbor, and instead of running it on Facebook, and now I have this ability to actually control the ad side or control the earning and rent. I always give example of, we have added a feature of rentable items. So if I use my vacuum cleaner twice a week, and it's just sitting in the closet, I can go ahead and rent it to another neighbor that doesn't need to go out and buy another appliance, right? So now I have these renting capabilities as well as buying, right? And buying and selling. So it's all integrating in the software already.
Thank you, Gabe. I love that, and I love the different aspects of value to not only the client base, which is the renters, but also adding value to the owners themselves and all the opportunities that are here. We're running pretty close to the end time here, so a couple more questions for you, Gabe, just really quick. What kind of investors, advisors, partnerships are you looking for currently with the project? And then after that, where can any of the audience contact you, whether that's for investment, information about the project, to get more info? Where can they contact you best?
Sure. First, we are, like I said, we're rolling out the software. We're looking to raise $100 million in 2025 to acquire about $500 million of assets. With 20% of that, we're probably going to be it could be either a way we're going to go venture funding, $20 million for integration and management, and $80 million for acquisition. of properties, real estate, multifamily nationwide. We have 30 operators in the US, and pretty agnostic as far as our region. So we welcome VC, we welcome, could be on the fund level, LPs, and so we welcome all type of capital at this point. We're buying right now, there's a property we're buying in Florida, and there's a $100 million property we just, we're in the best and final to acquire. So we do have institutional money coming in if we want to do an acquisition piecemeal, but we definitely want to bring in investors on a full scale, more of a grand scheme. Getting in touch with me very easy. Gabe at dealestate.ai or Gabe at bbelong.com. It's not BE, it's just the letter B with belong.com. Either way, it's really not a, go on our website, on LinkedIn. It's, my LinkedIn is Gabe Barr. Yeah, that's it. And I think Alan had a question there. Yeah, he rose his in here.
Yeah. Thanks, Gabe, for everything. But I wanted to ask, would you guys be partnering with like real estate investment trust, knowing that they go and buy a portfolio of multifamily real estate or properties or apartments, and then they'll have investors invest in, since you have the technology and the community, is that something that you would be?
Absolutely. Yeah, absolutely. Yeah. The intention here is to integrate our tech and really help customers kind of build their communities and eventually put them in a position where they can actually take a fractional ownership. So there's going to be whether it's going to be working with REIT, whether private or public REITs. We're open for the acquisition side. We're very open, whether it's going to be on a fund basis, whether it's going to be, but we're still going to be raising funds for the integration and the tech element of it. Yes. So the answer is yes.
Okay.
Perfect. Really quickly, we're running at the end of time here, guys. So I'll turn it over to Alan in just a second for prayer. I did want to shout out really quickly. We had a couple questions from Irish Kevin here. It looks like his question was, how would a tenant exit a tokenization investment? And then also, would there be a secondary market for those tokens? If you could answer that really quickly, Gabe, that'd be great.
I'll do it very quickly. Again, the tokenization side is whether it's a primary or secondary. It's a primary, it's capital raising, basically. We sell token, like I said, in the ITO basis. And it depends on the market. And then obviously when you buy a token, then the market, it's an open market. So it exists when there is a transaction with velocity. So we want to create value before we are out there, and the market is not big enough at the moment. It's definitely going there, but it's not big enough for transactional basis. So yes, I mean, it can be done on the token, on the smart token. There will be a secondary market, obviously. Initially, there's going to be a secondary market, and that's how transactions on. It's very similar to taking a company public. It's very similar. You have the stocks and the trader, New York Stock Exchange or the Nasdaq. So this is just going to be on the blockchain and with a smart contract.
Perfect. Thank you so much, Gabe. It's been a lot of information, and you have delivered it very well and very gracefully. So I appreciate that, sir. Alan, we will go ahead and throw it over to you. We're going to close up in prayer. Once again, thanks to all of our speakers, those who asked questions, everyone watching that submitted questions. We appreciate all of you. Myself and Crystal greatly appreciate the participation. Alan, I'll let you go ahead and take it away. You can close us in prayer.
Okay. Thank you so much for another week of Crypto Cannabis. Let's bow our heads and pray. Dear God, thank you so much for another week of Crypto Cannabis, where we can bring on just like-minded individuals and companies to share about their passion, their companies, and what they're striving for. And thank you so much for Deal Estate for coming on with Gabe, Oliver, AI with Sam, as well as Rich and Mike with Cobia. Continue to pray that you lead us in the right path and bring us the resources that we need. And most importantly, thank you, God, for putting this great group together to do great things for you, things that can glorify you. So I just continue to pray as you be in our presence. And in Christ's name we pray. Amen.
Amen.
Amen.